So guys, welcome to this video, and I'm going to be showing you how to use multiple time frame analysis to your advantage. And the pair we're going to be using to demonstrate this is ADUSD. So we start wasting so much time. Let's go into the chart. Now this is our ADUSD chart, and I'll just quickly go to the four-hour time frame. So we've got this chart right here, like you can see on the 4-hour time frame. So if you come on the 4-hour time frame, you just come into a chart like this. The first thing you're going to see is, oh, I see that price is going up. I mean, if you have no idea on how price action works, the first thing you will see is just this, that price seems to be going up. And once you see this, if you don't have a trading plan, if you don't have insight as to how the forex market moves, you will be blindsided into entering for a buy trade. And you will start trying to do such things like this. Okay, you will see that we are having some sort of movements this way. Maybe like this has happened here, and this, and then this is a retracement. This is a rally, and then this is a retracement. So when you see this type of thing, you'll be like, okay, I should be thinking of taking a trade very soon once I begin to see green candles. Some people can go further down. Like if you go to the 1-hour time frame, you will see this on the 1-hour time frame. You'll be like, oh, I can see a downtrend happening right about here. You say, oh, this trend seems to be going down, and this was the last support area, and it seems to be okay. Let me even make it more elaborate. So this is the last support area, and it seems to be that price has just broken or just about breaking below it. Okay, you'll be like, okay, I'm just going to wait. If price actually breaks below this, you'll be like, if price actually breaks below this point, then that's technically break of structure, so I should think of selling. Or on the flip side, you'll be looking at this, you'll be like, okay, price is respecting this trend line. This is the first tip. This is saying, so price seems to be respecting this trend line, and since price is going downtrend as occasioned by the trend line, and you're looking at that level, and you'll be like, once this happens, once price breaks below this support region, I should be thinking of selling. So even if you're having a buying bias, so that was for the seller's bias. So even if you're having a buying bias, and you'll be like, okay, I'm just going to wait for price to stay above here, and then possibly, break this trend line. Now, if price breaks this trend line, I'll be in for a quick buy. You'll be used to start doing something like this, take profits and all that and all that. That's not the way to trade. You can't trade blindly by looking at only just one time frame. That's what I'm trying to emphasize here. You don't trade blindly by focusing on one time frame, because you'll be blindsided for the bigger picture. So let me create a scenario. What if you're trying to go for a buy trade in this scenario, and the high time frame is saying something else? What if, I'm just going to take this off here, what if you've marked out your structures on this time frame, being a 4-hour time frame? You've well pinpointed that this zone, this place is a zone, and then possibly this is a zone, being that it was the most recent high created and all that. So I'll even I'll just duplicate this, clone it, and put it. Okay, I say since this was the most recent high created, that's possibly a zone, and this is not actually how to mark zones, but for the purpose of explanation, I'm just using this as an illustration. So you've marked out two zones like this, or maybe you might even do one more thing here like so, and say, okay, this is possibly a zone as well. And cool, you'll be like, you've marked out all your zones, and you're trying to take a buy trade. So I'll go back to that buy trade simulation I made. So this was the buy trade simulation. I will be like, if price breaks above this, I should be thinking of doing something like this and taking a trade all the way here. Now, what if price actually does give you that entry trigger, like so? Price gives you that entry trigger and you decide to buy. Wouldn't it be worth knowing that there are certain things that might prevent my trade from, getting to its intended target, which for me should be the TP, wouldn't it be worth knowing that there might possibly be a zone, a very strong zone which you've not seen right about this region? So I'm just going to mark this out. So wouldn't it be worth knowing that there might possibly be a major zone right about here which you are not seeing? So if this is the case, and this major zone can only be found on the higher time frame, so if this is the case and you have entered this buy trade and all of a sudden your buy sees to start progressing or proceeding, it gets here, you'll be like, oh, I'm already in profit. It gets here, will be like, oh, my trade is actually banging. And then all of a sudden, because of this major zone which you have no knowledge about, your trade now kicks it down because it's a strong region, it's a strong zone, and it has the power and intensity to pull back trades that are not in line with the monthly buyers or with the high time frame buyers. So this now happens and your trade gets pulled down back to your stop loss area and gets you stopped out. And be like, oh, why is my strategy not working? Before you know it, you go back to the next, you go back to the next strategy. So I'm trying to use this analogy now to show you that sometimes you should know what's happening on the high time frame so that you can be able to take better quality trades. So I'm going to show you how to go about this and make this video as easy as possible for everyone. So I'm just going to take all this out now, and I just wanted to use that to illustrate that sometimes you should know what's happening on the high time frame. The analogy I gave now can also apply to major trend lines that you are not seeing as well. So a lot of things can make your trades not to play out, but I want to use this video and open up your eyes to see the power of using the higher time frames and then going to lower time frames to make your trade entries, also known as multiple time frame analysis. So you should have a higher time frame bias, and then you should also have another time frame for structure, and then you should also have another time frame for entry. So because of my trading style, I'm a swing trader, so I will tell you how my trading style goes. I usually use my bias time frame as the monthly time frame. So my bias time frame is monthly time frame. That's where I go to know the direction of the market. So in this case now, this is AUD/USD. So I'll just go straight to the monthly time frame. So this is AUD/USD. I've come to the monthly time frame. So I'll come here and ask myself, what's actually happening here? Are we going down or are we coming up? So mainly looking at this on the monthly time frame, it doesn't take a second to know that this trend has been downtrend for a very long time. So this is my trend line. I could also draw a smaller trend line like so, and you can see that this market still has been obeying this trend line. If I'm going to be very, so this market has been obeying this trend line like so. Now we have seen that the market is going down. We'll go over to the weekly time frame. The weekly time frame is just to ensure that I have my zones currently marked. So now I've known that the monthly is telling me down. I should be careful if I go to the low time frames to make a trade. I should be careful if I'm going against that major time frame bias. If I'm seeing that the monthly is saying downwards and I'm trying to see a trading opportunity on my entry time frame, be the 4-hour time frame, 1 hour or 15 minutes, that is telling me to buy, I should be very, very careful. That's where cautiousness and risk management comes into play. If you know you want to go against the monthly bias, make sure you reduce your risk, because trading with a trend is different with trading against the trend. It's different from that. So now we've seen that the trend is going down. I will now come to the weekly time frame to see whether there are any major structures I can mark. So I will just use this, because since this is not really a video of structure, but I'll use this to exemplify that we do have some zones here. There's a zone here. I'll just clone this. There is also another zone here because price reacted like okay, actually this is the zone. Price reacted like several times here, so this is actually the zone. And then I could also possibly put one more here as well. You can also put it here. It doesn't really matter where you put it. Now I've marked zones like this potentially, so I could also put one more here to make this kind of a good chart to look at. You can see how clean my chart is. Now I've marked my zones like this. Now I now know that I have that in the back that we are moving southward or downwards on the monthly time frame. The weekly time frame, I've drawn my zones like you can see them quite, so I will now scale to the daily time frame to see whether I can get trades in the direction of the monthly. Now the weekly is not really showing any sign of reversal. I've not seen any chart patterns because chart patterns are what can dictate the reversal of a trend. On the weekly time frame, I can't see any chart pattern, to be very frank with you. So I'm going to go to the daily. On the daily time frame, I'll now come and see. I'll be like, okay, since price seems to have broken above like so, this monthly zone and retested it and seems to be, make it look like it's going up. This kind of trend, once I look at it, seems to be going against what the monthly bias is telling me. I mean, if you just draw this trend like so, you can see that it looks like an uptrend, although we have not technically crossed this level, quite comfortably and convincingly. We've not crossed that because an uptrend is marked by higher highs and higher lows. We've not really made any higher high because we've not crossed this horizontal level. But even if I want to take a buy trade, I should have a yardstick for that. It's not enough to say that, okay, the market seems to want to go up because the way I'm looking at it is structurally facing to the upside. No, that's where you get stopped out. If you take any kind of trade in this scenario, you will get stopped out. So the best thing to do is, and you can see that on this daily time frame, how many of you have seen the overall, the monthly trend line that is coming down? And you can see it right here. Who is seeing this trend line? That's the monthly trend line. And that goes to show you that whatever buy trade you are trying to take here, know that there is this trend line right here. This is the trend line that you should be afraid of. The trend line is telling you that price is technically bearish. And if you are trying to trade against what your monthly bias, which is the overall bias, is telling you, you have the highest probability of having your trade stopped out for a loss because you're just flowing against the river, and you shouldn't be flowing against the river. You should be trading in the direction of the trend. So in this scenario, what do I do? I've noted this. I'm like, okay, I feel the impulse, which you shouldn't usually really be feeling. I feel the impulse to want to trade to the upside. I go to the 1 hour time frame. I go to the 4 hour time frame. I'm not seeing a clear-cut uptrend because, like I said, this, in fact, the 4 hour time frame even makes it a little more objective. This particular region has not been taken off because the market came here. This is technically a higher high from this high, although it's not convincing. So this is technically a higher high from this one. This low is not very convincing because it's still very well with this low. So this is more like a range. Now the market has come here and has not broken its highest point, and it has not also traded above the zone on the body of the previous resistance. It's not yet traded above that. So we are still technically in a range. So this is how to read charts. I've been able to come to an objective conclusion based on my trading plan that I shouldn't be trying to take any buy trade on AED/USD now because the monthly time frame says that we should be trading downwards. The weekly time frame hasn't showed any pattern to warrant a reversal in my bias. The daily time frame is not giving us a clear-cut scenario of bullish trend. And on the 4 hour time frame, which is where I usually take entries, I'm not still seeing a proper bullish trend characteristic. I'm not seeing any of that. So summary, how do I go about this? Once I make all this kind of analysis and I just come to my entry time frame and I see that objectively I shouldn't be taking entry, what do? I just leave the chart. I leave the chart. Maybe look for something else on my watch list and go my way. So the essence of this video now is to show you how to use high time frame bias to position you for entering highly probable trades in your entry time frame. So I showed you that I do that from the monthly to the weekly to the daily and to the 4 hourly. So I hope by this video I've been able to at least impart some sort of knowledge as to how to trade. If you're a beginner or struggling trader that you have and on one or two occasions or several occasions have your trade stopped out, and you're feeling like, oh, you don't actually know this market, you're not reading the market properly, this could probably be the reason, because you are not maintaining the bias of the high time frames. So using multiple time frames to make a trade, and not just being zoomed in on just one particular time frame, is going to help you with your trades. And in that way, once you start taking trades in conformity with the overall bias, and then you scale down to your lower time frame and take those trades, you will see that you will have better setups and you will have better wins. As simple as that. So that's the end of this video now. And if you got value from it, just give me a like, thumbs up, and I'll see you later.